ARK Invest reports Tesla shares are going to be worth $2,000 a share in 2027. Now, this report came out on April 20th, 2023, so you might think, well, this is outdated. However, Elon Musk just said $1 trillion in profit for Tesla per year, so I figured that this was a great report to help us understand how Tesla is going to scale over this next decade and get to Elon Musk's trajectory prediction goal. In the trailing 12 months, Tesla made $13.8 billion in profit, which is only 1.3% of Elon's prediction. That means Tesla needs to 73x their current earnings to hit Elon's estimate. So it's a ton of money. Apple currently makes 7 times what Tesla makes. But if Tesla starts making $1 trillion a year, that'll be 10 times what Apple makes. So that is why we turn to ARK's report. We want to make sense of Elon's thinking. ARK's expected price target by 2027 is 2,000, but their bull case is 2,500. That is 10 times where we are today in just 3 or 4 years. Now, I like to keep things in check. I like to keep things in line, but we have to remember that ARK was right. They were the only research firm before the big blow up in 2020 who got Tesla's stock price ascension correct. So as we read through this, I'm going to question some of the things that they say, but I also have to remember that they could be right. Already, 2027, ARK is forecasting $350 billion in EBITDA for Tesla. For a research firm with billions of dollars to its name to forecast that Elon's already going to be 35% of the way to his trillion-dollar profit estimate by 2027, it's pretty cool. But to get there, some pretty crazy things need to happen. I mean, their bull case has 20 million Tesla vehicles being sold in 2027. Tesla's internal goal for 2030 is 20 million. So this is 3 years ahead of schedule. And I mean, where does this come from? We have to remember that this report does not include Tesla Optimus earnings or even its existence. So how does Tesla get to 20 million vehicles without the automation coming from Tesla Optimus? Well, we've just seen the Robotaxi is going to have 1 or 2 seats, so that helps because it sounds like it's going to be a lot smaller. It's going to have no paint shop, which the Model Y and the Model 3 do, and that slows things down. You gotta wait for paint to dry. And on top of that, with every new factory that Tesla makes, that factory is more efficient than the last one they made because they're always learning. Tesla wants to question, delete, simplify, accelerate, and then automate. ARK's bull case also includes a $26,000 average selling price in 2027. This seems low. It indicates that they expect probably 18, 17, maybe 19 million of the 20 million cars to be the $25,000 robotaxi or global car. I mean, when you have Tesla semis selling at $100,000, but they have an average selling price of $26K, it means they expect that low price vehicle to consummate almost all of Tesla's sales. On the flip side, it could mean that they expect the robotaxi to be a lot cheaper than $25,000. I mean, their predicted vehicle capital efficiency is best case $1,500. I suppose when you take away a paint shop, you switch to single piece gigacasting and you're just shoving metal, electronics, computers in one side and a car comes out the other, you can get your capex pretty low. I mean, ARK Invest has always been huge shouters of Wright's Law. They were shouting it from the rooftops from back in 2016, and they were right. Tesla got electric vehicle prices down, and I mean, Elon Musk is relentless. He doesn't stop making improvements to his engineering. So we could see these prices get low, but $1,500 in vehicle capital efficiency, I mean, that's crazy. The margins on every Tesla car sold would just be never be foreseen. It's hard to fathom, but their downside variation is 7,000. That's more in line with where Tesla is right now. I mean, you might not see that in the numbers, but that's because Berlin and Texas have been ramping, and that really increases your gross capex per car. So as these factories get on scale and their new factories are even more efficient, I mean, ARK might be right here. And with these price targets, I mean, just how crazy these statements are gets put into perspective when you look at the compound annual growth rate. For their bull case, if we do hit 2,500 by 2027, that's a 73% annual compound growth rate. If you go on those websites, the compound calculators, I mean, the max that they even allow you to calculate is like 30%. It's because these numbers are they're not possible. I mean, people are happy with 6% returns compounded. So when you see these numbers, you get scared. You think, oh, this is probably a bubble. But I'm telling you, with Elon, things are different. Somehow he's maintained a startup culture in a company that's now worth $800 billion. We've never seen companies like this before. I mean, 5 years ago, a company like this would have already transitioned to scale phase, but Tesla is still striking on innovation and they're still taking huge risks. We know that's in Elon's biology. He just wants to take risks. That's all he wants to do. He keeps putting all of his chips back on the table. Don't allocate your whole portfolio to it because, Tesla's taking risks, but I mean, if they're right, you can see the returns. It's massive. ARK is growing increasingly confident that Tesla will launch a robotaxi service soon, with late 2024 as the weighted average. Late 2024, the end of next year, is being 33%. For 2023, they had 22%, but that does not look like it's going to happen. If you see 2028, there's just a tiny sliver of a chance, but from 2029 to 2030, they literally have it at 0%. To them, it's 100% certain robotaxi service will happen before then. And to be honest, I agree. We've recently seen robotaxi services for Cruise come online in Austin and San Francisco, and these photos on Twitter just popped up last night. This is happening in Austin. All these cars are confused, lined up behind each other, but if these cars can get regulations, you sure as better believe that Tesla will get it. Check this out. ARK made a prediction in April. It's already come true. The recent flurry of AI progress, from LLMs like ChatGPT to image generation diffusion models like Midjourney, should accelerate innovation in the autonomous driving industry. This is what happened. Schroff, one of Tesla's engineers, brought the technology to Elon and said, we can adapt this to our own product. We can take this innovation that happened in the AI space and make our product better. Take away the heuristic code, be end-to-end neural nets training on video data. That's exactly what Tesla did. They accelerated in the autonomous driving industry just as ARK predicted. Another prediction that ARK got right about Dojo, suggesting that Tesla's plan to expand Dojo by 2 orders of magnitude next year will help the company shorten the time between model updates. ARK telling us, hey, Tesla's about to buy all this compute. 8 months later, Tesla does, and everybody freaks out. Well, ARK had already told us it was going to happen. Just look at this comparison between these competitors. Tesla's customers-owned fleet drives more than 120 million miles per day, which is now 140 million, and over 1 million miles per day in FSD. In contrast, in their multi-year lifetimes, Cruise and Waymo have reached just 1 million miles each, driven on public roads with no one behind the wheel. Tesla does that every single day. Moreover, Tesla accident statistics suggest that Tesla already has achieved performance superior to human drivers. Tesla's FSD is 5 times safer than a manually driven Tesla already. Back to CapEx. Capital expenditure per incremental unit of capacity improved from 84K when the Model 3 was ramping in 2017 to 7,700 in 2021. Simultaneous production ramps at 2 gigafactories led capital efficiency measured at the end of the year to increase to 14K in 2022. Once the initial ramp of those factories is complete, the implied capital expenditure per unit capacity continues its decline to $7,000 as shown below. So, we saw margins compress this year. They were worse. ARK literally just tells us there why that happened. Not totally why, because there was also inflation and rising of material costs. But as I've been saying in my videos, I expect Tesla to reclaim their margins, not necessarily by increasing their prices, which might happen after inflation goes back down, but simply by being more efficient within their factories and within manufacturing. You can see the cost curve. We're trending down towards $2,000-$3,000. In an even case scenario, $7,000. While these improvements indicate that Tesla could continue to increase margins, the more important takeaway is that capital is not a bottleneck limiting growth. Instead, Tesla should be able to grow as quickly as management bandwidth and supply constraints allow. This is the same philosophy that Elon has been preaching all year. He doesn't care about the margins right now. What he cares about right now is volume. The more you can penetrate the EV market, the more you can get customers on board, the more money you make in the long term, because software-based revenues, because people are exposed to your brand, they become lifetime buyers. As Meet Kevin once said, Tesla has already written the essay. They've already designed the factory. Now it is just about printing that essay all over the world, and we're seeing headwinds from places like Mexico who want to regulate and get political. But now this morning news broke that Saudi Arabia really wants Tesla to build a factory in their country. Plenty of countries have been saying this, so Tesla has a lot of options, and you've seen Elon going from country to country lately, picking their best option. And news is that Tesla will announce where they want to build their next factory by the end of this year. So we're going to be having construction in Mexico and in another country. So that's going to be like, 8 factories building cars. And remember, Tesla produces a car that is capable of FSD every 16 seconds. And with a robotaxi platform, Tesla should be able to generate earnings from both the vehicle sale and a recurring ride-hail revenue stream, which ARK believes could generate software-like margins, and Elon Musk has called it the biggest asset value increase in history when this happens. But on top of the ride-hail stream, on top of the hardware, another thing that's going to be a huge driver of profits is advertising. Now that people are sitting in your robotaxi and they don't have to think, they don't have to give their attention to driving, you have that opportunity because now they are looking for something to give their attention to. Tesla can sell advertising space on the screen that plays on the dashboard in the front of the car. Tesla can start their own media subsidiary and hire production companies to make movies. Tesla plays those movies or those TV shows in the car while people are being driven around, of course, with advertisement commercial breaks. Imagine the economic opportunity when you're transporting literally everybody in the world and they're sitting in your cars. People would pay huge money for that because you're boxed in. You have no choice but to look at the screen. That's huge ad space, huge. And what's wild about ARK's price target is that it does not even include Tesla's Optimus humanoid robot. They don't see it contributing significantly to Tesla's value within the next 5 years. But remember, this report was made in April. And since then, Tesla has taken those technologies that were learned in LLM and applied it to FSD, which in my opinion makes Tesla's humanoid robot timeline faster. This is because now software engineers don't have to worry about the heuristic code and coding the robot to not do all of these things and when to do all of these things. Now it can scale faster because it's learning with video data, which you can feed it faster than you could write a bunch of lines of code. So when we see ARK's next report next April, I think they're going to start to include the humanoid robot. I think the robot can easily double that $350 billion in EBITDA we saw for the robotaxi over the long term. There's a big demand for the robot. Our labor force is shrinking. There are 10 million unfilled jobs in the United States. 7 million of those job openings are for essential roles in warehouses, transportation, and retail. These are all jobs that are going to be appealing to employers for taking on a humanoid robot to do. There are only 6 million people available to fill these open positions, and attrition rates remain high. Key warehouse suppliers predict that they will run out of people to hire by 2024, and the people that are available to hire are currently picketing in Detroit. The big three, their employees are asking for outrageous sums of money, and they're asking for Fridays off. The demand for humanoid robots is going sky high, and right now, Tesla has no legitimate competitors. I made a video highlighting 5 of Tesla's most legitimate competitors, and Tesla was above and beyond ahead of them in the competition in manufacturing, in talent. Nobody at this point has the capital or expertise that Tesla does. They're going to design this whole thing, supply this whole thing in-house. It's awesome. So yes, with robotaxis, with Optimus, I can see where Elon is coming from with his $1 trillion profit prediction. It is a long way away, but I think the strongest case I could make if I was to be an advocate for this happening would be this. Apple's ecosystem is essential, right? And they make $100 billion a year with this ecosystem. Now, Tesla's ecosystem is also essential. You need it to drive a world of sustainable energy. You need a car that's zero emissions, and then you need a house that's zero emissions that can charge your car. This is the energy. This is the solar roofs charging your car with power walls and energy storage. So you have an essential Apple ecosystem that generates 100 billion. And now you have an essential Tesla ecosystem that's 10 times, 20 times more expensive to accrue than Apple's ecosystem. So $100 billion in profit, and then you 10x that with Tesla's ecosystem, that's $1 trillion in profit. It's the best analogy I can come up with that foresees how we get there, even though that ecosystem has nothing to do with Robotaxi and Optimus. It was just a fun thought experiment. But within that, Tesla has to achieve Apple-like margins, and they have to also fulfill the volume of Apple's ecosystem, which is full of people that don't own a home. So it's a bad analogy, I admit, but it was a fun one. Anyways, guys, I just wanted to thank you for all of your support recently. All of the comments, they're so encouraging, and some of them are really, really insightful. I actually learn a lot just from reading all of the comments. You guys all have great things to add, and I appreciate all of it so much, and I will see you in the next video.